Okay, so in this video, we're going to be discussing the question of how much money do I need to start investing and when is a good time to start investing. So if that sounds like a good idea, if you could take a quick second to drop a like on this video, I would very much appreciate it and it really helps out the channel. So I've been getting asked this question quite a bit, so I thought I'd break it down in a video here for you guys, and it'd be a good place to point people back to whenever I get this question again in the future, which I'm sure will definitely happen. So on a very basic level, I guess I could give a smart answer here and say that you only need €1 to start investing, because a lot of these platforms offer fractional shares, which means that you can buy into any of your favorite stocks for as little as €1. But just because you can do that doesn't mean that it's a good idea to do that. So I broke this down into a couple of different questions that we need to ask ourselves in order to understand if we are ready to start investing in the stock market. So the first question that I would ask someone is, do you have a steady income? Whether it be big or small, do you roughly know how much money you are getting in each month? Then, from that money that we get each month, after we take away our necessary expenses, such as food, such as rent, all the other kind of utilities that we may have, loan repayments, different things like that, a good way to track this is just open up an Excel and start to put in all your fixed expenses and maybe your rough food expenses, just to see how much each month that you're actually spending on average. Then take your net income for the week or the month, whatever basis you do this on, and then subtract your expenses from it and see how much you have left over. If it turns out that you're in the negative each month, which is definitely a possibility for some people, I'm sure, it's not really a good idea to start investing. What you should do here is probably work out ways and try to reduce your expenses, or try to look at more ways to earn income or get a promotion to earn more money. Definitely easier said than done, but I'm just trying to highlight here that you shouldn't be looking at starting to invest if you don't have enough money coming in each month that provides you with an excess. Okay, so let's say we have €200 left over each month after we've taken away most of our expenses. So now we can move on to the next step because we've identified a little bit of cash that we can afford to invest each month. Okay, so the next scenario we need to look at is, let's say, for example, you're out of work for a week. Maybe something happens where you need to get new tires on the car, some unforeseen expense essentially, or loss of income. Do you have enough money on the side that you will be able to either supplement your income for that week, or do you have enough money to be able to buy them 4 new tires on the car? We don't want to invest money that we're going to need to pull out in cases of emergencies, because the markets, while in general they are higher after long periods of time, in the short term nobody really knows what happens, and you don't want to be pulling your money out when it's at a loss. And that is why we have something called an emergency fund or rainy day fund. This is essentially a savings account that you can use in emergencies, like I've given an example for there. A great place to store this emergency fund is somewhere like the credit union or a savings account in the bank. Essentially somewhere that is separate to your current account that you can access relatively easy, but not so quickly that you'll end up dipping into it. The amount you actually save in these emergency funds will obviously differ per person on a case-by-case basis, but a general guideline is to have around 2 to 3 months expenses saved in one of these. Anything less than that wouldn't really be sufficient, and anything over that is probably a little bit in excess. But as I said, it really depends on the person. If you have a situation where you have kids and stuff, you might want that emergency fund just a little bit higher to make sure you can look after them in case of any emergencies. As I mentioned there, the scenario where you probably have an excess amount in your emergency funds. I know a lot of people that have thousands saved up that they're not going to be using in the next 1 to 2 years, and basically it's just getting eaten away by inflation. Now, I'm not saying it's a bad idea to save your money there, but there's definitely more alternatives that you can use for that excess cash in the short term, and one of them, of course, is stock market investing, and it's probably why you're watching this video. Okay, so now that we've got that out of the way, we've established that we have some excess income each month. In this example, we're going with approximately €200, and we've also ensured that we've built up an emergency fund of at least 2 to 3 months expenses to cover us in case of any emergencies. So the next question we need to ask ourselves is, what do we expect to see from our stock market investing in terms of returns? Okay, so let's say you start investing today. In exactly 1 year's time, how much would you have expected to see your money grow? If your answer is 100% returns, you're probably going to be disappointed come this time next year. It's definitely not impossible to see returns like that, but it is quite unlikely all the same. If you're hoping for roughly 7 to 10% returns, this is much more achievable, and you're probably going to be pretty satisfied in 1 year's time. For example, the S&P 500 index returns on average 5 to 7% each year. Now, some years this could be higher and some years this could be lower, but on average it comes out to about 5 to 7%. Obviously, there's potential for hundreds and even thousands of percent gains here, but it obviously depends on what you invest in and, of course, your risk appetite as well. Basically, things with the biggest upside probably also have the biggest downside risk as well. So now that we've got a rough idea of what we can expect in terms of the growth of our money in the stock market, the next question is, will I need this money that I'm going to invest in the next 12 months. Hopefully, by you already having established an emergency fund, there will be no need for you to pull out your investment funds in case of an emergency, because as I said, in the short term, the stock market is unpredictable. So if you're withdrawing in that 12-month time frame, there may be a chance that you'll have less money in there than you started off with. So it's just a risk you need to be aware of. But if you don't need to withdraw this money in the next 12 months, investing could definitely be for you. And there's a strong chance that the money you've invested will probably be worth more than it did when you started off. Of course, this is not guaranteed, and as I said, will completely depend on what you invest in and how the markets perform. Generally, when it comes to investing, especially retail investing in the stock market, there's a general guideline that says you should probably leave your money in here for at least 3 to 5 years in order to get the most out of it, and ensure that when you're taking your money out, it'll be worth more than when you put it in. If you want to see my progress on my investments so far, I will leave an icon up here that will link you to my latest stock portfolio updates. I try to do these monthly, so they're a good indicator of how I'm personally performing and what I'm invested in. Okay, so once we've realized what we can roughly expect in terms of market gains, and we've identified some money that we're looking to invest into the stock market, the next thing we need to decide is on what stocks to invest in. Now, I don't want to make this video too long, so I'm going to do another video covering off some different kinds of investment strategies. We'll cover off dividend investing, growth stock investing, value investing, and also investing in index funds. So if you're looking forward to that, make sure you do subscribe to the channel. It really does help me out. And please feel free to share this video with any friends who are looking at getting started in the stock market investing world. It's generally a good guideline to set yourself up for success from the start, and make sure you don't make any rookie mistakes. Anyway guys, thanks for watching, and I'll catch you in the next one.